Welcome back to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming at you live for the past couple of days at Inside ETFs in Hollywood, Florida. And joining me for this segment is Tim Clift, who's the Chief Investment Strategy at Envestnet. And we're going to focus on ETFs continuing to dominate asset flows. Tim, thanks very much for joining us at Nasdaq's booth 207. And do you think this trend of ETFs dominating asset flows will continue for 2018?
Yeah, I don't see what's going to stop the flows. I think that we're going to continue to see very large flows, and there's some perception that if we get a market correction, that ETFs will suffer and that active management will come back in favor. I just don't think that's the paradigm. I think investors are buying ETFs because they're tracking the markets. If they track them up, they track them down, they're doing what they're supposed to do, so they're not going to be disappointed in that way.
Where have ETFs underperformed, and where do you see opportunities?
Yeah, I don't think they've underperformed from a performance standpoint, but I think from a asset class standpoint, they're pretty seriously underrepresented in fixed income. We've seen really, even just last year, the flows have been double on the mutual fund side that they have been on ETF, and on the corporate side. And if you look at munis, it's really 5 times as much flows into mutual funds as ETFs. So they really haven't caught up there. They're certainly dominating on the equity side, domestic equity in particular, but not as much on fixed income.
It's really interesting. One of the key themes that we've had on Trade Talks and just hearing around the conference is fixed income has been one of the hottest things here, particularly smart beta. So I agree with you there. But do you think this active versus passive debate is over?
No, and I think this whole, I think they're both great. I think you combine them in portfolios, that makes a lot of sense. I think certain asset classes make a difference in when you go active or passive, even in market environments. There's some that are more favorable to active versus passive. So I think the debate will go on forever. I don't think there's a winner or loser there. I think it's going to be, how you combine them, how you think about the macro conditions, you look at the asset classes, how you're building portfolios is going to change. And I think that's more important to think about.
And finally, do you think of Robo Advising as a threat to traditional active management?
I don't think Robo Advisor is a threat at all. I think it's just a digital capability that advisors need to embrace. I think if they aren't using technology, they're going to fall behind. If they're competing on performance, if they're competing on fees, the Robo Advisors will overtake them. But if they are embracing it, I think they can scale their businesses better. They'll be much more efficient. So I think it's a great thing as long as they adopt it.
All right. Well, thank you very much for joining us. And traders, thank you for joining me throughout the day. I'm Jill Malandrino, Global Market